Hey everyone, this is Kirk here again at Option Alpha. Just wanted to send out this weekend video update. It's Sunday, July 10th. Gonna head off into earnings season this coming week, so we definitely had a pretty wild last 2 weeks here, I'd say, and ending really this past Friday with the jobs numbers that were absolutely horrible. And yet the market seemed to kind of really rebound from the early morning sell-off. So of course we'll get into that chart, some couple earnings thing that we're going to go over, of course, but it's going to be a pretty interesting week. We have earnings, we have options expiration, so it's going to be pretty packed. The first thing I wanted to go over tonight was this whole deal on earnings, and this is just my take on what's going to happen here, and I'll show you a couple charts. The first thing, we're just on Reuters here, and just an article that they had about an earnings surprise. Now the funny thing is when I was at BB&T, this also happened where you'd see a lot of analysts that would actually revise their estimates downward for companies so that they could beat the estimates. And so I always tell people when they're looking at earnings is that if it's a beat in estimate, is it really a good number? I mean, what's the number? What's the year over year growth that we're starting to see? And I think a couple of key things in this article kind of drive home that point here. And you can see that over the last month, analysts have revised downward earnings for S&P companies. The mean change in earnings estimate has been a negative 6.4%. So analysts have brought down their estimates so that it's easier for companies to beat. And it's pretty funny because actually the company's reported earnings last quarter were about 18.9% growth year over year first quarter. And so they have on average estimates of about 7% year over year for the second quarter. So you can clearly see that analysts are revising their estimates downward. That's clearly a negative thing, but if a lot of companies beat these downward revisions in estimates and quote unquote beat estimates, all you hear is just the catchy news title of the company beat estimates, right? So here's actually a really good chart from Bespoke on the consecutive weeks up and down of earnings revisions. And you can see that right now we're in one of the most dramatic revisions downward, only second to one of the most dramatic ones back in 2008. So you can see we're definitely in a very rare category here of analysts downward revising their earnings estimates for the coming quarters. So as always, just take everything with a grain of salt when you guys read it. Try to read between the lines and really don't see that headline that says, Alcoa beat or JP Morgan beat or whatever the case is. Really get in there and go through the data if you're gonna trade these stocks here and see what they've really done, not just that they beat an estimate that was too low. The other thing that I thought was pretty interesting, again back here on Reuters, just as far as the article here, is all this thing that's now going on in Italy, right? So we had Greece, and Greece got bailed out, and now Italy, and you can see that there was already has been sharp selling off of Italian assets, and I know that some of their collateralized debt obligations and some of their CDO stuff had really gone up, and some of their bonds yields have really dramatically increased because investors just don't want to take the risk anymore. And I think that this is going to be something that the European Union is going to have to confront every step along the way. As soon as you bail one out, the next one right down the line, Italy, et cetera, Spain, they're all going to have a lot of problems. So this isn't going away anytime soon. And I think that this, coupled with a couple of the things in the U.S. economy with the jobs numbers, I really don't see how much further the market can rally, obviously. But as one person put it to me on a coaching call the other night, with less people working, that means corporate profitability could be up. So that's one thing to consider. So as we get towards the actual charts, I think something that's funny with the Italy index is just that it made a very good and clean breakout of its trend line, and retracement. And this is the EWI, and this is the iShares Italy Index Fund, obviously. But again, you can see here as I zoom in that it was trading right along this trend line, very steady, up until just about early June when it broke down below this trend line significantly, right? It kind of popped below this trend line a little bit before, but significantly broke down below, and already you can see on the charts it was already screaming to short it. You can see it had this breakdown, and then as always on most retracement levels, whether it's support or resistance, it breaks down, comes back up towards that level and retests that zone as resistance, which is exactly what it did before moving away. So I'm pretty much safe to assume that when this thing opens up on Monday, it's going to be dramatically lower. So that's as far as that's going to go. With the SPY, again, really just astronomical type move that we had in the market. You can see that is almost straight vertical until the last couple days here, and just complete turnaround. And you ask everyone on the Facebook page, I did a couple Facebook polls back on the 20th and the 19th of June, and everyone for sure thought the market was going lower, right? Everyone was scared out of their minds, and here we are with the market rallying dramatically higher in the last 8 or 9 days here. I think what's interesting about this is you look across the board at the Russell and the NASDAQ, etc. We'll go over the NASDAQ. Most of these have rallied consecutive days up. Look at the NASDAQ has almost rallied except for Friday, consecutive days higher, almost 9 days in a row consecutively higher. So it's very, very overbought. You look at some of the things like CCI, which has already started to turn over and topped out a couple days ago. Same thing with MACD. MACD is extremely overbought on these, going back to multi-year overbought levels. And again, rolling over. You can see MACD, the indicator of the histogram here, is already rolling over, right? So there's a lot that we have to price into the market, a lot of things that are kind of working in different areas, right? Obviously, sentiment is now turned into the bullish favor. Things are bullish, and bad news is still coming out. So that's obviously still a bullish thing. So it'll be interesting to see where the market kind of goes this week. I think Monday is going to be very quiet until we hit Alcoa earnings. And then JP Morgan and Google, obviously, later on in the week. So those are going to be the big bellwethers for the rest of the week. But as always, options expiration is going to kind of complicate things. So look for some volatility, obviously. Keep your stop losses tight. Add some protection when you can. And as always, I hope you guys enjoyed this video, and happy trading.